A profit and loss account is a measure of how well or badly a business has done over a period, typically a year, and you would expect to see things like the sales, the expenses, maybe purchases of goods, overheads, maybe depreciation of fixed assets, added up. They come off the sales, and the difference is the profit you've made or the loss you've made. And unfortunately, there are different ways of calculating profit, which some people find quite frustrating. But for example, if you're preparing companies' accounts, there are Companies Act rules you have to follow. So you have to prepare a profit and loss account that complies with them. That might be different to the profit and loss account you provide for management purposes for running your business. You might have different policies. You probably will have different policies. You might not be interested in certain things the Companies Act says you should have, and vice versa. And then also, HM Revenue and Customs have their own version of profit, which ignores depreciation, for example, and gives you tax relief at 100% at the moment on buying plant and equipment and various types of fixed assets. So you can end up with different profit figures for the same period, for the same business. And that can lead to confusion for some people. But basically, it is a measure of how the business is done, but then you take into account why you want to know, who wants to know, and why, and then you would maybe tweak the profit and loss account depending on those parameters.